Hey guys, it's Will here. I'm going to talk about the markets, and I'm going to show you a feature of TC2000 I'm using, which is this column here with the check marks. And I'm going to talk about uptrends and downtrends, which is what I was talking about before with the moving averages, but I'm going to just, go into a little more detail. So if we look at the markets like the Russell 2000, it's in good shape. But ideally, we want it to be above the 50 moving average and even the 21 day. So it's coming back a bit here. But we can see that we have higher highs and higher lows. So that's the thing I wanted to mention. In this video, I'll do it in different charts, but when you have a pullback and then it continues to go up, you can put a little line. So TC2000 has these drawing tools here. So I like to put a little flat line right like that. And if you want to get a free trial of this program that has all the charts, check out the link in the description. You can get $25 off as well if you decide to purchase. I've got the gold plan and real-time US data, and that gets you the pre-market data as well, so you can see in the morning before it opens, like what's happening. And then you could potentially buy the stock if you want in the pre-market or post-market. So what I'm looking for, and if you've seen my videos, you generally get the sense, is an uptrend. And that's going to be, indicated by higher highs and higher lows. So every time there's like a pullback, you see here, you're establishing a new low, like and then you also have, a higher low, and then you also have higher highs as well. So you see here. So it helps to put the lines on here. TC2000 will keep those lines on your drawing as long as you want them to be. And I can put one, here as well. So what I'm looking for is higher highs and higher lows. And, I'd like it to be above the 50 and even the 21 EMA. So on this chart, if you've seen my other diagrams, I've kind of minimized the 8 EMA that I was using. And the reason for that is there's a bit of, with the volatility that's going on right now, I was getting stopped out, if you put a stop too close. And so I want to give things a bit more room to breathe. So if you have a moving average, you click on that little arrow and it pops up. I'll do it again. So you click on the arrow of any of these moving averages. So these are the moving averages or whatever indicators you have on the chart. And then there's some indicators down here as well. So if you click on the arrow and you say edit, there's this opacity line. And if I increase this, you'll see the line come back, the 8 EMA. So you don't have to get rid of it. You can either like keep it light or you can completely make it go away. So I'm focusing right now on 250 and the 21 EMA, just so I can let things breathe a bit more. But the same concepts that I've talked about before apply. So you want to see usually increasing highs and lows. So this isn't in the perfect scenario right now in terms of getting back in, but from my perspective, even though it has bounced off of this recent, so this was a bit close to the previous low. So if we go to the SPY S&P 500, you can see we have higher highs and higher lows, and we are above. We had a big bounce on Friday, and we are now above the 50 and the 21 EMA. So that one's looking good now. So you see with this kind of thing, I'll talk about the transition from an uptrend to a downtrend, but there's a period where it's not 100%, transitioned yet. You'll start to see a lower high, but you don't necessarily have lower lows yet. And same thing with the reversal of the trend. So you don't have to be right on the trend right as soon as it changes. But when you get this pullback here, you can notice that you don't get to the previous low. So if you're too trigger happy with stop losses, you're gonna get stopped out. So what a good idea would be to have your stop at the previous low point. And for some people, that's going to be too much of a gap between what they purchased it at and the low. But it's not really about your percentage loss. Like if you set it at 5 or 10%, which is still, decent. The market doesn't really care. It's more about the structure of the charts and where previous resistance and support is. So you have to kind of accept that these lows would be the ultimate, point where you might want to sell if it gets to that point. But so when you see, a candle down to the 50 and then the next day you see an up candle, that could be an indication that you could take a chance that this is going to act as support and put a stop right below that, so you get fairly close. Your stop isn't too far away from where you purchased it. Here you had it down, but one day is not always enough to just completely reverse. So that is a little bit risky, but I think you just have to accept a bigger. You have to use these strategic structural points for your stops. And also, I'm not using actual stop losses I'm not using stops in the broker. I'm waiting till the end of the day normally because a lot of times things come back quite a bit. And NASDAQ, so this is an example where we have lower highs. You see here, it hit here again, and then, but now we have a higher low. So we're in a bit of a transition. Now we're also, the 21 EMA is below the 50, and the price is also the candles below the 21 and the 50. So I want to see this get above the 50, and I want to see the 21 get up above the 50. So this little higher low is a good sign, but it's still got lower highs. The other thing I want to mention is that I'd like to see the 21 EMA above the 50. So it's a bit of obviously it's a, it's a lagging indicator. Like we come down, if you sell right when you get below the 50, a lot of times things will recover and the 21 never gets below the 50. So, it's up to you if you want to sell right at the 50, but sometimes you'll see like for example, if you're buying every time it goes below the 50 and above, you're going to get a lot of these ups and downs here. So it just prevents that from happening if you wait for the 21. So when the 21 crossed, you'd be down here, and which is a bit late, and then you'd wait for it to get to 21 to get back up above the 50. And if you decide to sell, you'd want to see it close below the 50. So here we got below the 50 during the day, but it ended up above. So if it closes down here, you could get out here. And then if you want to buy, you'd want to see it close above the 50. This is really close. So really, that would have worked too. You would have got out right there, and you'd be waiting for a close, above the 50. So there's pluses and minuses to every strategy. And then lastly, the Dow. So we have higher highs and higher lows. Dow's looking really good. So these are kind of the rotation reopening plays. I wanted to mention a few ETFs. So the ETFs represent the sectors. So I like these instead of just buying the overall index. And even like if you're in tech, there's like 3D printing, there's robotics, there's the electric vehicles, solar energy, there's a lot of there's cannabis, stuff like that. So instead of buying individual stocks, you can buy, the sector, but still be targeted to different niches, so If we look at this XME, it was up 6.6%, which is huge. So as I mentioned, there was a low here, like the support, and we hit that support and we bounced off of it. So if you had your stop, or if you're your mental stop at this point, you still be in, and you would have benefited from staying in there. And so see, the previous low was down here. So we're establishing higher lows and we have higher highs here. So we're still, in good shape here. And even though, like, you see how low it got down here, or even here, I mentioned that the 21 EMA stayed above. So if you want to be a little bit more patient, you can not sell as soon as it closes below the 50 here. You can give it a chance. But we did break this previous low down when we closed here. It's very close. Actually, probably not. It depends where you draw the line, at the close or at the low of the day. So if you waited, if you're patient, you probably didn't break this previous low here. So I would probably put that up here, and you can see that you never really broke that low. So if you're patient and wait for the end of the day closing, a lot of times stuff gets pushed back. So obviously metals and mining are used, like aluminum and all that, in the economy. Home builders looking really good. We now broke out over this recent high. We've had support here, and we have that now. We had support, and then it bounced up. So what I liked was, like I said earlier, you see how this candle closed here below this previous low. Well, like I said again, it pushes up again. So if you're patient and you see this previous low, basically you wouldn't get out. And even with the close below the 50 here, you still managed to be near this recent low. And also the 21 EMA stayed above the 50. So using the 21 EMA and the 50 can kind of allow you to stay in, and also the previous lows. So you have you're establishing higher highs and higher lows. So home building, home construction. And the interesting thing, interest rates are, going up. And so, you would think that mortgages and things would be higher rates and stuff like that, but it's actually doing really well. The other one that's, financial and banks, you see how you have this big pullback. A lot of people would get triggered out, stopped out on this stuff, but you had support at the 50, and it's, depending on where you draw your lows, like there's, the issue is, with lows is, when they're happening, you're not sure right away if that's a low or not. So you can consider a lot of these to be lows, but you can see these pullbacks give you that sense that there's like the main pullbacks here established at those low points. So we're, obviously if you buy up here, that's quite a distance from there. But you can see that you do get pullbacks, but they're supported usually at a moving average or a previous resistance. The other one, that was financial. This is energy. So we have higher highs and higher lows. We're above the 50. We're now closed above the 21 EMA. So this one's looking really good in terms of, this is Canada, but you have XLE in the States. Same sort of thing. Higher highs and higher lows. So a lot of these are reopening plays. Jets, same thing, higher highs, higher lows. So even though you broke below the 21, we had support at the 50, and we didn't break a previous low. So if you can be patient and wait for those situations. And the other thing is, if you buy at some point and the low is quite a ways, you can always set a maximum stop loss of like 8% or 10% or whatever, and you have to kind of bite that, but you could get burned on that because of where you've purchased in relation to a previous support point. So I've got tabs on the sectors, obviously copper, and even in the tech we're starting to see some rebounding. We had a big push back on the semiconductors. So now we're above the 50. I'd want to see, you can see here, like we have, you know, I'm going to just put a line at the top. We have lower highs here. So I'd want to see higher highs established. So right now there is a higher lows. So you have that low there, and then we have, say, this one, which, you know, looks like it is going to be a higher low. But I'd want to start to see higher highs. So, you know, this would have to start to come up here and and that shows like the 21 is below the 50 here. So you have to be a little bit patient. I like to be patient because when you have lower highs and higher lows, you're in that transition. So that's where you can draw like a wedge like this and something like that. And, you know, you kind of wait to see if it's going to break out of that and start to establish an uptrend. You've got alternative energy, you know, kind of bounced off this recent support, but with the lower highs, I'd want to wait to see more. And you can see the 21 is below the 50, and the 50 is curling down like this. So one last thing, I just wanted to show you. One thing I have is I want to see, say you want to see the prices above the 50. If you have stocks in your stock portfolio or one of your watch lists or sectors, ETFs or whatever, you can put a condition. So instead of having a value, you can have a condition. So for example, if I say, if I'm here, and I want to insert a column, I can say a condition, and then I can put one of my conditions. So it could be moving average. So you can pick simple moving average, for example. And then you can edit that, and it'll say moving average, the price is greater. The moving average is greater than 0. I don't really want that. I want the price history is above the 50, and I say okay. So this shows you, this is a nice way sometimes, instead of like clicking around and seeing, you know, are my stocks above the 50, or if you have a watch list, and then of course you can scan for stocks that are above the 50 or whatever you're looking for. Hope that helps. Don't forget you can get TC2000 in the link below for free, a free trial, or $25 off if you decide to purchase. Thanks guys, see you later.